Welcome to Tony Byrne's View, with news you can use. As a chartered financial planner and wealth manager, Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
Will lifetime allowance be abolished? When Jeremy Hunt, the Chancellor of the Exchequer, presented the budget on 15th of March, he made the surprise announcement that the lifetime allowance will be abolished from 6th of April 2023. The lifetime allowance is a cap on the value of pensions of £1,073,100, above which a tax charge of 55% will apply as a result of a benefit crystallisation event, or BCE. The problem is HMRC has 13 BCEs. The tax charge is exorbitant. The lifetime allowance was introduced in April 2006. Prior to this, we only had limits on contributions. It has never made sense to me to have a cap on both contributions and the size of your pension. If you have a cap on contributions, you do not also need a cap on the size of your pension pot. This recent announcement simply puts us back to the situation we were in before April 2006. Jeremy Hunt has announced a cap on contributions only. He also announced some other pension changes, such as increasing the annual allowance from £40,000 to £60,000 from 6th of April 2023. The government will increase both the money purchased annual allowance and the tapered annual allowance from £4,000 to £10,000 from 6th of April 2023 too. The adjusted income threshold for the annual allowance will also be increased from £240,000 to £260,000 from 6th of April 2023 as well. However, the maximum tax-free cash lump sum will remain at 25% of the existing lifetime allowance level of £1,073,100, resulting in a maximum amount of £268,275, which will be frozen. Yet again, the government is freezing an allowance at a time of high inflation, which in effect increases taxation. Read my recent blogs on the lifetime allowance and the annual allowance for more insights. They can both be found on our website at wealthandtax.co.uk. The first one is simply headed Lifetime Allowance Planning, and the second one is How to Avoid the Reduced Annual Allowance of Your Pension Contributions. The reason the Conservatives have decided to make these changes is to encourage the over 50s to return to work. The Conservative reforms announced in the budget followed a long campaign from NHS doctors for whom pension tax rules have been a major obstacle. Unlike private sector workers, they are unable to control how much money goes into their pension because they are members of a generous defined benefit scheme. For many, the only way to avoid large unexpected tax bills has been to reduce their working hours or retire early. Ministers are concerned because the UK is the only major country where economic inactivity, the number of people aged between 18 and 65 who are not in work, is higher than before the pandemic. However, Labour immediately said it would reverse the changes if it wins the next election. Rachel Reeves, the Shadow Chancellor, said, "At a time when families across the country face rising bills, higher costs and frozen wages, this gilded giveaway is the wrong priority at the wrong time for the wrong people. That's why a Labour government will reverse this move. We urge the Chancellor and the Conservative government to think again too." Labour currently has a 22-point lead over the Conservatives, according to a YouGov poll published this week. The next general election must be held by January 2025, meaning the lifetime allowance could be removed for just 9 months of a new Labour administration. Reinstatement of the cap at £1,073,100 under Labour could hit around as many as 2 million non-retired people, according to new estimates from the consultancy LCP. The problem is that the Conservatives haven't actually abolished the lifetime allowance. All they've done is announced it will not apply from 6th of April 2023 for the next tax year 2023-24. They have yet to create the finance bill which will lead to the Finance Act which will abolish the lifetime allowance from 6th of April 2024. This puts the public in the unique position of knowing this could well be a one tax year only opportunity to crystallise their pensions and avoid the punitive 55% tax charge on what would have been a benefit crystallisation event, or BCE. So Steve Webb, a former pensions minister and now partner at LCP, said that the threat of a Labour government could spark a stampede of people saving into their pensions today and retiring before Labour overhauls savings rules. People will just max out the size of their pot and then, if they think a Labour government is imminent, will cash out just before the election, take their pensions, he said. So ironically, Labour's pledge to reverse this abolition of the lifetime allowance could have the opposite effect. Instead of attracting back to work prematurely retired people, it may actually incentivise them to take their retirement benefits early instead. If your pension or pensions are close to or in excess of the lifetime allowance, you need to get professional advice on your retirement options. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.